Holy flippity flip flop flap and smokes everyone. I've just got some huge news that shows that US real estate companies are in a very bad position, just like we're seeing in China right now. And people, when I got and saw this information and saw how bad it really was, I was shocked. So everyone, what exactly is happening to real estate companies and developers in the US, and will this lead to a China-like Evergrande crisis and real estate collapse? Let's have a look. Listen to this everyone, real estate is the most zombified sector and rate hikes will be a big risk, says consultancy. Now to put it very simply for those of you that don't know, a zombie company is classified as a company that's been operating for over 10 years and is making just enough revenue to service interest payments. That's right, not to pay off their debt, not to earn profit. They're making just enough to get by to only pay the interest. But what's happening now and what's going to be coming? Rate hikes. And this is going to be a zombie company killer. Let's have a deeper look, everyone. Listen to this. The real estate sector has the highest absolute number of zombie companies and the highest share of zombie companies in 2020. And it's these real estate zombie companies that are fueling this real estate bubble, because these companies should have gone under. But it's through the bailouts of the Federal Reserve and it's through the taxpayers bailing them out. They're the reason why you can't afford a home. Because in a normal free capitalist market, bad companies will fail. But in today's environment, no billionaire can get a boo-boo and every billionaire gets a first place award. But it's actually much worse than this. More broadly, the report found the number of listed zombie firms nearly tripled from around 600 in 2010 to nearly 1,800 in 2020. And this is only up to 2020. The consultant said in his recent interview with CNBC that it is likely much higher than that now in 2022. Niels Culloween pointed out that the global financial crisis of 2008 started with a real estate and housing price bubble and mortgage defaults in the United States. What we're seeing now again, 13 years later, is that again, the real estate sector has the highest share of zombie companies, he told CNBC. And listen to his warning he's got for all of us. Minor external changes such as rising interest rates or a deteriorating economic environment can put such companies at the risk of insolvency or lead to an abrupt implosion, said a 2021 Kenya report that examined 67,000 listed companies from 154 industries and 152 countries. This is a risk I've been warning you about. I've been saying there is just so much debt in the system right now, not just with companies. We're seeing this with government debt, consumer debt, that even if we just have a small amount of increase in interest rates, we're going to see a devastating effect on all these companies and all these consumers that are in debt up to their eyeballs. Because this is the risk that's going to happen when the Federal Reserve starts hiking interest rates. Listen to this everyone. He said if interest rates double, the number of zombie companies firm will increase by nearly 40%, he added. That is absolutely crazy. And what is the Federal Reserve planning to do? 4 rate hikes this year and another 4 next year. So that means interest rates will go up by 2%. And we saw mortgage rates hit a low of around 2.6% in 2020. And so if interest rates, the federal funds rate goes up 2%, we could see interest rates double to 4.5% to 5% for mortgages. But that's residential mortgages. Some of these real estate companies were able to access the Federal Reserve funding facility and get debt at 0.75% to stay afloat. So if interest rates go up to 2%, we could see these zombie companies' interest cost triple. Okay, but now we're about to get into the juicy information. How many real estate developers are in trouble in America? Listen to this. Around 5% of companies in other sectors were classified as zombies, but the figure was the highest, 7.4% in the real estate industry. But the percentage of zombie company real estate conglomerates and development firms is even higher, and they didn't even give a number. So the industry average is 5%, but real estate is 7.4%. Real estate development companies that were zombie companies was even worse than that, and they wouldn't even give the figure. Could this be because they don't want to spark fear like what's happening with China, where nobody has face to buy these off-the-plan apartments or buy these homes that haven't been built yet? And we're seeing the construction quality in the US get worse and worse, and this is happening in Australia and really anywhere around the world, and I hope they don't start building these tofu buildings like in China. And what they're also warning is the current supply chain crisis is going to make it worse. The recent spike in cases and the labor shortages will make it worse. And also what's happening with many of these construction companies and developers is people sign a contract to get their price fixed for maybe even up to a year, but inflation is absolutely destroying their profit margins because after they sign their contract, all of a sudden costs are skyrocketing much higher than they expected. So, but what you're probably wondering is, what does this mean for you and me? me. Well, what this means is it's these zombie companies that are fueling these housing bubble, and this is why we're not getting corrections when we should. And what keeps happening time and time again is every time there's a crisis, these companies get bailouts, but us, the people, we get the scraps. But what this also means is the only thing that was keeping these zombie companies alive was cheap credit. And with now interest rates likely to rise, companies' revenues are down, we're seeing the stock market is crashing. Well, what I think this means is we're going to see a wave of insolvencies late 2022. So if you're building a home or buying an apartment, I'll be definitely doing background checks on the developer to see what kind of financial position they are in. So I hope this opened your eyes to how fake the economy really is, how fake the markets are, and how manipulated they are to paint a rosy picture when really underneath the surface they are rotten to the core. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.